Alright, what is good everyone? Hope you are all doing well and welcome back to another video. In today's video, I'm going to review this trade right here. So this scenario right here is a really, it was a great trade, my opinion. Almost 7 risk reward ratio right there. 1 to 7 risk reward ratio. A really clean trade right there, really clean delivery, really clean expansion right there. And well, this trade was like really interesting, especially the intermarket profiling, like the intermarket hint that I said. Like you always have something that is tipping his hands on the intermarket, and you need to learn how to understand that. But first things first, guys, I want to show you my hard time frame first because that's the most important thing, So I was like on the daily chart, so I always start my day, my analysis, looking at the daily chart. And right here, the daily chart, we can see that this candle right here, this is Monday candle. So Trump said some shit, like always, on Monday, and it and some inside trading stuff, things like that, it formed this candle right here. So this massive candle. So this is almost 1,000 ticks, 1,000 points candle, like 4% variation, bro. So this is insane. This is insane. All right. So on the lower time frame right here, the mid time frame, I mean the 4-hour, we're been consolidating between this low and this high, and there's not much to do inside of this range. Like this high right here is a protected high, and this low right here is a protected low, because it has separate there, sweep out this low, and this high sweep out that high. So it's protected swings. And we had this fair value gap right here that is been struggling to do anything with that. So price is struggling to continue higher and to continue lower. All right. So there's nothing much to do right here. But we know that this low or this high needs to be taken out. All right. So this high or this low needs to be taken out because we are working with a halving theory, like the weekly halving theory that says that price needs to form its swing low or swing high of the week in the first 2 days of the week, and the other swing on the other half, so in the other 3 days. So if this is the low of the week, it's right there. If this is the low of the week, then we need the price to form its high right in this whole time window right here. So inside of this period of time right here, so Wednesday, Thursday, and Friday, it needs to go all the way up to place the high of week. All right. Or if this is the high of week, on the other hand, then price needs to go all the way down to this low to take out this low. So one of these two things need to happen. And where these things will happen, like expansion up or expansion down, always from relevant swings, So you need to watch out for relevant swings in the markets. And relevant swings can be framed by swings next to this or this that has a great distance, a great separation from this high or this low. So in this scenario, we have this is a relevant swing right there. And here we can frame two scenarios because this right here is a relevant high as well, because as you can see, this low is the low that is after this one, the swing lower there, and it has a large separation, and this high is the next one to this high, and it has a great separation, you know. So this is relevant swing as well. So in this scenario, we had like we have some stuff, like we have a framework. So if price wants to go all the way up to this high, it needs to manipulate this low right here and fail to manipulate this high. All right. Or if it wants to go from this high, like from this high, and this continues the high of week, now this keeps being the high of week, and price go all the way to this low, we need price to sweep this relevant swing right here and then expand away, and then fail to manipulate this low. That is like breaking this low, you know. So these are the two things that can happen, and we can frame those things by relevant swings. So I'll be ignoring these lows, these highs, these lows right here. I'll be ignoring anything inside of this range, and I'll be trading only things that happens at relevant swings. So yesterday we had sequential SMC right here, and this is relevant. This is really relevant because this frames a short opportunity. That's why the price like traded all the way down here. All right. So what's the other step that price needs to do? It needs to fail to manipulate this low. That is break this low. It's a breakout of this low. So we need to have like bearish signatures right here that price wants to continue lower right here on the New York session. All right. To break this relevant swing. If price manipulates this low, so it like makes this sweep right here, then we would expect price to go all the way up there. All right. So everything today, like for today, will rely on what price form in this low, of what price do in this low, you know. So we can expect if price forms bearish cracker correlations right here, bearish sweeps on the lower time frame to continue lower, we can expect price to continue lower. But if price forms bullish cracking correlations and bullish scenarios, bullish profiles, things like that, we can expect at least a retracement. All right, at least a retracement of this range right here. So at least at premium. So this sets a scenario that we can trade and frame bullish like buys from here, longs, you know, bullish scenarios. Right? So yeah. But as you can see, there's no quarter TPD right here. And you know that I really like to trade quarter TPDs. But there's no quarter TPDs on the 6 hour and either on the 9 minutes, anything like that. So in this scenario right here is where I'm going to use fractal QTPDs. And if there's not fractal QTPDs, I'll use intermarket. So I use everything in this scenario to try to frame a trade right here, a buy opportunity, because everything right now, not everything, but we have a relevant swing right here and we're sweeping it. So I'll take a look at the maximum information that I have in order to frame a trade, or to know if it is a bad day, like it's a bad price action and I want to get out of the market as soon as possible. You know, so in this scenario, I had a lot of confirmations, a lot of stuff right here that confirmed this as a possible low, but we had no quarter TPD, and we have no fractal TPD that is under 15 minutes right here. So what did I use? I used intermarket, intermarket. So the mainly thing that I'm using intermarket right here is with copper. Yeah, copper is a great correlation with the indices. Most people don't know this, but it is, and it can help a lot to frame high probable intermarket sequential SMTs. So we had the 6-hour quarter TPD here on copper. So as you can see, now we have a QTPD that I need to trade away from. And here is the sequential SMT, the intermarket sequential SMT that we had between the lows. So this is what makes this scenario right here higher probability, in my opinion. And right before 9 a.m., we had this candle right here. This candle is a TPD on the 1 hour as well. So I use timely TPDs for fractal TPDs, but I can use 1 hour TPDs, specifically the 8 a.m. candle, 1 hour candle, as a fractal TPD as well to trade the 9 a.m., the market opening, when there's sequential SMT right there. So we have this as a fractal QTPD as well. And this forms another sequential, another SMT right there, So in this scenario, we have a lot of stuff, and we have sequential SMT, and we have SMT with the relevant swing as well. So Nasdaq is the only one that managed to trade into that low, that relevant swing, and it's a SMT with the relevant swing. So this is important. And then we have this second stage right here confirming this first SMT, and we have this TPD, this quarter TPD, this daily cycle sequential SMT with copper, and the quarter TPD right here. So this is like everything that I want to look for. This is perfect scenario. All right, so at market open, I want to trade a 30-minute power of 3. So a 30-minute power of 3 is market opens at 9:30, and then it goes to a direction, then to trade away. So it's like 9:30, placing the manipulation. So it opens up, and then place the first manipulation, and then expand. All right. So I want to trade this power of 3 right here. All right. In this scenario, it's a bullish power of 3, and that's what happens right here. All right, so price opens up right here at 9:30. And it drops all the way to this low. So in this scenario right here, at the open, we already had enough confirmation to try longs from this area right here. So this was a mistake, a little mistake that I made, because I made 2 trades right here, and I had 2 stops. So I had to take, I took 2 losses right here. So it was like unnecessary losses, to take this 2 right here. But after the price formed this sequential SMT, and this sequential SMT is a 9-minute sequential SMT, 2 stages, like confirming everything that I already said. And then price could start trading higher from this low. So this is confirming the low of the 30-minute power of 3, So the 30-minute power of 3 is this 9:30 right here. Power of 3, placing the manipulation. So I dropped to the lower time frame right here to execute these trades. All right. So we had this close over right here. So price closed above this candle. This is the changing state of delivery. This is my first trade right now. So I placed a trade right there and got like that stop loss right here. And I was targeting this high right here. I was targeting especially this high right here, because this is the 9:30 high. So this is market high. The regular trading area is high, you know, at the moment. Well, this is a timely high. And then I was targeting these highs right there. You know, so we can form a market maker by model. So this is like a 7 risk reward ratio. This is a huge risk reward ratio. And then I answer right there with 5 contracts, 5 micro contracts. Then price starts to react. And then here on this candle, I had my second confirmation. So this is the first entry, the risk entry, you know, that is valid because this is just TIG stop loss. And this one is like the confirmation entry. You know, this confirmation entry is from the entire CSD right here and the inversion fair value gap. So price right here formed this 2 confirmations, and then I took it, stop loss right here, and then target right there. So this is a 4 risk reward ratio trade as well, but I answered on the same position, you know, so I entered 5 here, and then I added 5 here, and you could see on my execution, you know, my average price was something like right here, and yeah, really great stuff. Like taking my average, it was something like this, and as you can see, I just increased my risk reward ratio in this scenario by adding trades because now I have a higher stop loss, and then I have more contracts, you know. So I was right here risking $250. Right here I was still risking $250, right? But my target is right there, and it pays a lot more. So this is really great to add, like it's really great to add into positions, you know. So this was the trade. This was the trade idea. And I'm not expecting price to do much, like it's consolidating right here. Also, New York has been really consolidative these days, so we need to trade these specific movements right there and capitalize on it. And that's it, you know, so don't be trying to long all the way to the moon right there, you know. But if price forms this reversion right there and it gives like some sort of continuity, you know, some continuation, probably this is a really relevant swing protecting this one, and then we could see price going all the way up to that highs, right? Or if price do not continue higher right there and it breaks this and starts to trade lower and break the second chart 70, then this high rate is protected. This high will be protected as well in order to trade towards this low. All right, so yeah, those are the scenarios that can be formed right here, and that's it. So that's my trade recap for today. Sorry for my bad English. I am thinking like a lot of things. There's a lot of things that I wish I could explain better in English, and that's confusing me a little, especially my pronunciation. But that's it. Hope that it's insightful. Like, hope that this video was insightful, and see you all in the next video. Thank you.